all right. Here we are, ready to rock and roll. How are you guys doing today? I wanted to share just a little bit about the news, and so that's what I thought we would start off with. And then we're going to go in and we're going to look at the portfolio and see how things are doing. Today, Tuesday, 8 o'clock this morning, right now, we're waiting for, it looks like we got the actual numbers, non-farm payroll coming up, annual revision. Notice they started to do revisions all the time because they can't get it right the first time. So they're saying that the revision is the actual is 9/11. Previous was 8/18. Non-farm payroll annual revision. So previous was 8. They're actually saying it went down even more. So that's not good. Non-farm payroll went down. Okay. Well, it is what it is. All right, API crude oil stock exchange, that comes in today at 2:30. That's the only news we got today. So 8 o'clock, the market is not going to like that. Let's jump over and pull up our software. Uh-oh, could not connect. Oh, let's see. Let's go to the demo. There we go. How many versions of this thing have I got open? Just one. How's everybody doing this morning? Let's see what happened. Something's going crazy with our internet. There was an issue connecting to the servers. I just barely had that open. That's weird. Okay, we'll try again. I'll put this off the screen for a second and let that work on its own. Okay, so let's go in and look at the market in a different way. That's not coming up for me. Oh, there it goes. See if that makes a difference. Trying to get the software, get our platform. We'll just go in and look at it over here. Let's go look at the S&P over here. Let's go SPY. I got some fun stuff to show you today. I'm pretty excited about what we've got going. Man alive, this market is crazy. Crazy, crazy, crazy. Look at that. Broke the third set of dots. Now, this isn't the blue light, but it's close enough. It's the parabolic SAR. So, man, we're up there. Man, we're doing wonderful things up here at the S&P. Isn't that crazy? Crazy. All right, let's go look at the Qs. Q. All right, the Qs, same thing. We're way up there. We're in the third drive 1, drive 2, drive 3. We're up here at the top. The problem is this is starting to wander sideways a little bit. And the Wyckoff accumulation distribution model tells us that we got to get a pullback in here, that this thing's got to, I can't use this software. Got to get a pullback in here somewhere. Now, the thing is that the only thing right now that's keeping this market propped up is the only thing that's keeping this thing propped up is the MAGS, MAG 7, MAGS, Magnificent 7. These guys are propping the market up. Look at this thing. Everything else is flushing. I mean, if you go look outside the MAGs, just the Apple, Amazon, Netflix, Google, right? MAG 7, the ones that are all the big tech stocks, all the big AI stocks. They're the only things really keeping the market up. If you look at some of the other stocks, let's go down through a list. We got, well, we don't want, let's see, that's, let's look at some of these other stocks. And you'll see that some of them are already flushing. This is Adobe. They flushed hard, and they never did rally like the other ones. Now, the problem with Adobe, and everybody, used to love Adobe. The problem with Adobe is that the AI is coming out. Like one of their biggest products was Adobe Photoshop, right? Where you could go in and you could adjust things. We used to always say on the internet, oh, that's been Photoshopped, right? When we were saying we were looking at an image or a picture or something that wasn't that we didn't believe was real. We'd say, oh, it's been Photoshopped. That's this company, right? But now AI, we don't even say that anymore about pictures. Oh, that's AI. We don't say it's been Photoshopped. We say, oh, that's AI. So is Adobe going to be able to recover? Now they're using AI in their Adobe Photoshop, and it makes it really cool. But at this point, you're almost like, well, I don't even need Photoshop anymore. I just, use AI. So look at this. Look at this. I don't know what to say about that. I don't know what to say about that. So there's nothing I'll say other than I don't know if I'd buy that or not. It's a nice little buy signal right now. It says to, but I don't know how big of a winner this is going to be. So let's come back over and let's look at another one. Let's look at Boeing. Boeing's right up here to the top two. Drive 1, drive 2, drive 3. You want to be a buyer of Boeing at the top of the third drive? I don't. I don't want to buy Boeing right there. Says it's going to come down. Is it going to come down? Doesn't have to. I mean, no, nothing says it has to. It's just that that's the patterns that these markets go through time and time and time again. So I would expect this thing to come back down, drop down at least down into this moving average, right? Around to 200. Let's come down here and see. Boeing sales not doing very good. They're not buying. Look, they're not buying back their shares. That's positive. Look at their earnings per share. Ooh. But all these people are upgrade, 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 upgrade. Look, they love Boeing. Oh, this is great Boeing. Their sales are drifting lower. Their shares are buying. They're putting out more shares. Their earnings per share sucks. Everything sucks. They did have good earnings here, though. Their gap wasn't very good, but we don't really care about gap. And this one here, even gap was good on that one. So this was not good at this rate, and at this rate, the price level was the same. So they must have picked up a contract or two. So this one here, and the share price went way up. They still had good earnings, except for the gap. I don't know. Buy 1, buy 2, buy 3. I would short this market if anything. I wouldn't be buying it. Let's look at a couple more, and then we'll go over and look at our portfolio. So that's let's look at Caterpillar. It's another favorite people like, right? So we're in here. John, what's wrong, John? John's upset. What's the problem, John? You having problems? Don't know. All right. So Caterpillar's way up there at the top. Now they didn't break a 3-drive pattern. They're just two big drives, but it's still that same pattern. I'm still expecting a break below that trend line, right? Look at that. Nice little trend line across there. I should really have my other platform, but it's not coming up. I'm expecting this thing to flush, right? I don't know. I'm not buying right there. It's going into a nice little triangle formation, though. But I think it's a little wedge pattern that I think we're going to see that market flush out the bottom. Sales are drifting a little bit. Look, this is their first 2024. They had a down. But where are they at right now? Income sales 63.14 billion. So they're still got 3 months to go, and they're at 63. You can make $1 billion in one quarter. I think they can do it. Shares outstanding. Now they're buying their shares back. Everybody's upgrading them. Their earnings per share is way high, but no, we'll have to see on that one. I think we need to pull back so we can buy in. That's what I think on Caterpillar. I'd like to be a buyer. I like to be a buyer right here, right here. I don't know how this little program works. Let's make that. Let's see Caterpillar come back down into there, and then that's where we'll be a buyer. We can buy Caterpillar right there. All right, let's go look at another one. Let's go to CRM. Well, not this one. I don't want this one. CRM. This is Salesforce. Salesforce. Why in the heck is Salesforce dead? Salesforce sells a software program that you use to manage all of your contacts for your business. So all of your customers are in there, clients are in there, and then you can email them and you can share them around with your other members of your company. Earnings, had good earnings. Sales in billions, way up. Wow. Sales 39.5 billion. 30, man, they're making big money. Oh man. Earnings per share is high. They're buying back their shares. Why are they buying back their shares? They'll tell you they're buying back their shares because they're, oh, we're sharing our income with you. No, you're not. That's a lie. You're propping up your stock. Propping up their stock because it's way down in the toilet right now. It shouldn't be in the toilet. They shouldn't have to be buying back their shares. Look at their sales, 37, and they're currently right now with a quarter left to go at 39. This is a big buy, man. This is a buy, buy, buy. Why is everybody downgrading? Because these guys are always wrong. Oh, man, that's a buy if I ever saw it. I don't know why that's so low. They got to have big earnings. Look, they had big earnings, and then the market flushed like a toilet. We need to buy that. Write that down. CRM. Buy, buy, buy. Buy, buy, buy. Everything says to buy. Why would we not buy on that one? Let's come in here and let's pull up our friend Grok. And let's ask Grok a few questions about CRM. Grok, Grok, Grok. Hey, Grok. How about giving me a quick SWOT on CRM, Salesforce company. Hey, Grok, how about a quick SWOT? This request is a SWOT. He's thinking. Why he's thinking over there? We'll set him aside for a second and let him do his thoughts, and we'll go look at another one. It seems everything there looks good to me. Let's go to the next one I have on our list is J&J. Look at that baby. Johnston & Johnston. Drive 1, drive 2, drive 3. That's kind of an ugly, that's all one big drive 1. That looks like 3 times a charm right there. Look at that. We got charm 1. We got charm 2. We got charm 3. And man, that thing took off and went to the moon. The thing is, that's drive 1. I would count that normally as an A1 right there. But this looks like drive 1, drive 2, drive 3. We're getting low, a higher low, a higher low, and then the third drive. That's kind of ugly. I don't like it. If you don't like it, what do you do with it, Lan? Well, you usually just kind of sit on your hands because I certainly don't want to, I don't know. I would like to see it pull back a little farther. I would like to see Johnston & Johnston here come back a little bit more than that. Maybe we could put a Fibonacci ruler. Does this program have Fibonacci? Fibonacci, what's that? Fibonacci. So we'll go from just this low here up to here. And that puts our 38.2 right here. Just have sand back. They copied us really good. Right in here. I'd like to see it right down there, at least before we buy again. Don't really want to buy right here. Doesn't mean it can't go more, but it's not flushing in our September. Remember, September's our worst month, and it's not flushing for us like we'd like. We're getting little red bars in there. That's that first green back to a few reds, and then oftentimes we'll get the first green candle to make a new high would be a buy signal. So we got to keep that in mind too. If you're anxious about getting into some Johnson & Johnson, let's look at this down here. Johnson & Johnson, current sales, 90,000. 88,000. They're already going to blow this out of the water. They're going to be way up here. And then they're buying their shares back. They don't need to be buying shares back. Earnings per share, 579. This should be way high. Earnings per share. Trailing 12 months, 34. That's not what we're looking for. Sales year to year, 469. 935. I think that's, trailing 12 months. I think that's the one we're looking for, 995. That would blow this thing out of the water. Erste Group in July upgraded them. So I don't know. This looks good, but I want to see a pullback. We need to get a little pullback in here. Come on, buddy. Come on, Johnson & Johnson. We don't want to be buying way up here at the top of the RSI. All right. So let's come back over here. Let's see. We're going to go back over to CRM, Salesforce. Hey, Lan, sure thing. You'd think you knew who I was. Salesforce, I'm assuming that the CRM powerhouse you meant, right, is a beast in the cloud software world. But let's break down a quick swap based on the latest insight. I'll keep it straightforward and pull from a recent analysis to give you a real picture of mid-2025. Here's how it strikes out. All right, so this is CRM. Dominant market leader in cloud-based CRM with innovative AI tools like Agentforce and Einstein driving customers' engagement and productivity. Their Customer 360 platform unifies everything from sales to analytics, setting them apart. Solid financial subscription revenue hit $18.99 billion for the first half, up from $17.35 billion last year. Net income climbed to $3.438, and R&D spent was $2.94 billion, showing they've invested big growth, diversified portfolio, Slack, Multisoft, Tableau, and strong track record in M&A, plus a skilled global workforce. What the heck is M&A? Man, mamas and papas. It's got to be something. I don't know. Maybe you guys know. Weakness, heavy resilience on subscriptions. Okay, this is their weakness. They have a heavy reliance on subscriptions. 95% of their revenue is subscription-based, which means churn risks if customers bail or innovation slips. Professional services. I oftentimes think personally that subscriptions are a good, Grok considers that a weakness. I consider that a strength. Because if you have, like, I'm going to just use my own personal experience, all right, and tell you about how my businesses ran. When I first started my businesses, I had like 3 big customers. I had Utah State University, I had BYU, I had Utah State University. I had all the universities. I was selling to the universities. And the problem I had, I went to the bank and I said, I need to get a loan. I want to build a building. I've got all these employees, nowhere to put them. I'm renting. I want to grow my business. And they said, we can't give you a loan. And I said, well, why not? I'm doing great. They said, because the majority of your income comes from just a very small handful of companies. So they said, if you lost one client, Utah State University stopped buying from you. Hold on a second. I'm losing my voice. If Utah State stopped buying from you, you wouldn't be able to afford your building. Granted, you have your other businesses, but you too reliant on just like 4 companies, 4 organizations for all of your income. And if you just lose one, that's going to really hurt. And so we can't take that risk. They wouldn't give me money for the building. So it was at that point I decided that I was going to change my business model. Oh my goodness. Hold on one more time. I was going to change my business model to a subscription-based service. And the reason was because if I have 1,000 subscribers paying me $20, making a lot more money. Mergers and acquisitions. Thanks, Rock. Mergers and acquisitions. So what are they doing with mergers? And strong track record in mergers and acquisitions, plus a skilled global workforce, diversified portfolio, and strong record in mergers and acquisitions. So they're buying up companies. Okay. So if I had a whole bunch of clients making small payments to me, I was more stable than if I had 4 clients giving me all my money. It's the way the bank looked at it. And so when I diversified and started doing a subscription service-based company and branched out, then when I went to the bank and I said, "Okay, I've got 1,000 clients all giving me this much money," they were like, "Oh, look, sign your paper right here. Go buy your building." And I went and bought my building. So it took me a little while to switch that model. And I'm glad I did. I mean, it's true. For me, I was very much happier having a model like this. That, and it's calling this a weakness. Heavy resilience on subscriptions, 95% of its revenue. I think that's a good thing. Challenges with high employee turnover and integrated acquiring computer cultures, plus some inefficient cash use. Opportunities, AI boom. Generating AI and automation are huge, letting them expand into tailored solutions for industries like healthcare and finance, plus deeper SME penetration. SME. I wish it would write, but what's SME? Global push. Emerging markets with rising digitization, plus online channeling and economic recovery to snag new customers. Strategic investments. You know, I don't think if they can integrate AI into their system, but there's not, I mean, AI can help you write emails, right? I mean, that's really what this is. These guys really are. Salesforce is all about managing your client list and sending them emails. That's basically what they are. They're an email marketing software company. And they could integrate AI into their software, and they could have AI help people write their email and help them automate their. It's already fully automated, though. You don't need AI for what they do other than help you write better emails. I don't know. I don't. You still need to manage all your clients. I don't think AI is going to kill this company. That's the point I'm trying to find out. Threats, cutthroat competition from big players and startups eroding market share with aggressive pricing. Geopolitical risk, current swings and economic uncertainty like Ukraine tensions, potential security breaches damaging a reputation, potential security. Well, they have had that problem. This has always been a real stalwart company. People have always really been happy with it. Go back and look at it one more time. I don't know. See, they're saying the opportunity is the AI boom if they'll take advantage of it. They got to be taking advantage of it. I think this is an opportunity in reality. I think this is a really good opportunity. I think this is a great company. I think that the problems that they've had, they can solve. They're not big problems. I don't know. Think about AI. I think this is a big opportunity. I'm sorry, I've taken a long time thinking about this one because I think this is a good buy. I don't think AI is going to take them out. I think these guys are just going to take advantage of the AI capabilities that can enhance their business, and people aren't going to leave Salesforce because of AI. AI is not going to come in and take people away from Salesforce. AI is just going to make Salesforce a better company if they can capitalize on it and integrate it into their software, which I think they are. They say the opportunity is AI boom, generative AI and automation are huge. I think this is a good opportunity. I think I'm making a buy recommendation on this one. Not that I would back up my entire sell the barn and sell the cows, but I think that we could comfortably put money in this one right here. I mean, we've already down here at the bottom. We need track and trade. Daggone it. Can't get my track and trade up. I think I'm going to say buy. Let's buy that one. We're going to buy that one. I got that written down on my buy list. I'd like to go look at the options on this one because I think this is a great options opportunity. We need to track and trade, track and trade. What's wrong with you today? Try one more time. See if it'll connect. Don't have a lot of problems with that connecting. I don't know what's going on today. All right, let's go into the next one. Let's go look at one more here. It keeps trying to give me a software update. There was an issue connecting to the server. Well, no, there it goes. Okay, let's look at our next one. Next one on our list is J&J. Oh, we looked at Johnson & Johnson. I'm not ready to buy that one. NFLX. Netflix. Oh, look at that. That is a tough spot to be in, to be recommending a buy, but that's a buy right there on Netflix. That'd be a cautious buy. Little break right there above that little, that's a little triangle formation. That thing pulled back. Look at that. It's almost pretty. Almost pretty. I hate to be a buyer in September, going into September, but that is a pretty little setup right there. It pulled all the way back to, if we put Fibonacci in there, look at this. We're going to put that in there. It pulled back and touched our 38.2 like a train on rails. Holy cow, look at that. It came back right there. Look at that. That's not on our arrow land. I can't use this software. It sucks. I'm not good at it. All right, look at that. This still isn't working for me over here. Look at that. Oh my gosh, right down to the point. And then it made the nice little triangle formation, made the first, look at that. I mean, we could pull up. Do I want to do it? Where's our, I don't have it up right now. I was going to pull up our little pictures. That's like right straight out of the manual. Right straight out of the manual. What manual? Yeah, there's a manual to the internet. Didn't you know there's to the stock market? Go search Lion H. Turner on Amazon and buy the manual. It's right straight out of the manual. And now we're getting the first little pullback. That's a little pennant formation, and away we go. That's a buy. It's not a heavy buy because we're still up pretty high, but it is a buy. And if you like Netflix, and it's been good to me once in a while, but it's been bad to me too. I got my hiney handed to me once with Netflix. But I'm going to write that one down as a cautious buy. We're going into September. I hate to be a big buyer in September. But when you get a signal like that, it could probably, I don't know, probably go up to and touch the top. And then it'll probably bounce around up here a little bit. Who knows? I don't think it's going to be real strong till October. But we'll see. I don't know. I'd like to see some options on it. We have some options opportunities on there. Netflix, not bad. Let's go to the next one, PYPL. PayPal. Oh, that's ugly. Why is PayPal not dancing for us? Look at all the earnings on this thing. You guys, everybody's like, nobody uses PayPal anymore. They all use Venmo. Right? Yeah, how many times you heard somebody say, nobody uses PayPal anymore. They all use Venmo. Venmo is PayPal. Did you know that? Venmo is PayPal. Nobody uses PayPal anymore. I'm not buying their stock. Nobody uses them anymore. Everybody uses Venmo. Venmo is PayPal. All right. But their sales are going, their shares out. So they've been buying their shares back. Their sales are going up. Their sales are going up. Their earnings are going up. Income sales, 32 billion. Look at that. They're in the fourth quarter. We still got a quarter to go and they're already at 32 billion. And last year was at 31 billion at the end of the year. They're making money hand over fist. Why are they buying their shares back? They're having to prop their shares up. Look, even with buying their shares back, their stock's not going up. Earnings. 4.6. Look, earnings last year were at 3.99, and right now they're at 4.67. This is another opportunity, in my opinion. Big sales. Sales bigger than every year ever. Last year was 31.79. They're sitting at 32, right? 32.30 right now, and we still got 4 months to go. 5 months to go if you count September. 4 months to go if you count September. And they're down here, and that's a sell signal. You know who they look like? Are they going through an accumulation? It's not a very pretty accumulation stage. I think they're going through an accumulation stage. Yeah, I would like to see if the big hedge funds and who's buying this stuff. Insider trading. Look, they're selling. June, July, August. The insiders are selling. Makes no sense to me. I like this one. If I was a hedge fund manager, I'd be loading up on this baby. I'm going to write that down. PayPal, PYPL. I think that in the third quarter or the fourth quarter of this year, this thing's going to go to the moon. It's got to, unless there's something. Should we do a SWOT on it? What is the reason that this thing's not gone with the rest of the market? AI is not going to have any effect on people wanting to go out and buy things with their little Venmo. I think that give me a SWOT on Venmo or on PayPal. Let's let that work for a minute. Set it off here. All right, let's go look at another one while Grok's working on that. Doing a little research for us. UNH. Got to look at UNH. UNH. They're taking off like a rocket ship. My son sent me a text yesterday. He said, "Dad, I bought a whole bunch of it. What do you think?" I said, "I think you should hang on to it because I think you're going to be a rich, rich man." He put a lot of money into it too. He really feels positive about it. And it broke higher today. He's going to be a happy man today. I think the recovery on this is only on its way. You know what this was right here? This thing flushed down like a toilet. And who's that rich guy? Warren Buffett. Warren Buffett bought right there. That's what caused that rally. So Warren Buffett's in. He's all in. Not all in, but he's all in. That thing's going to the moon. I think that's going to be a big recovery. I think we're going to see this thing. Have we got a horizontal line on this? We do right there. There's a breaking that previous high. And it's doing that today, right now. Ooh, oof, oof. My son's going to be happy, happy, happy on that one. He loaded up. He bought a lot through here. Where's it going to go to? Oh, if we just put the Fibonacci ruler on there. Just put the Fibonacci ruler on there. We're breaking the 23.6, 30. We're still headed towards 38.2 right here. 50's clear up here, 61.8. If it goes up to just up into the Fibonacci sweet spot, we're going to see it up into here. It's currently trading at 327. I think we'll see it up at 426. And I think it's going to go there relatively fast. I think you're going to see it go right back up. Right back up. Better write that one down. UNH. We're making a buy sub. UNH. We're making a buy recommendation on UNH right now. Let's go ahead and look at that one on a 3. Look at that thing. Took off today like a rocket ship. It's pulled back a little bit. It's rallying a little bit. I don't know. I would see if, if you want to play the buy game, see if it won't this afternoon flush back down a little bit, but it might, buy in here somewhere. I don't know. Not worried about it. I wish we had options. We could go look at options. All right. Got to go look at the options on this baby. Breaking out that narrow channel. We knew that was going to come. That was coming. That was coming. That was coming. Oh, my son's going to be happy. He bought a lot of that. He wrote me the other day, so you think I ought to keep it? I said, I think you ought to keep it. Or over the weekend. I said, keep it. Keep it. All right. That's the last one. Oh, we got one more. One more on our list. Oh, and then we got to go back and see what Grok said. PLTR. We got to look at PLTR. Oh. Ooh, I want to see it drop one more time. It doesn't look like it wants to. It's doing that same thing as UNH. See X2 down here. Come on, buddy. Give me one more drop. Please give me one more drop. All right. I want one more drop. I don't know if we're going to get it. It failed to come out the bottom where it was supposed to right here. It just kept going sideways. I don't think anybody else wants to sell out their positions. I think they all want to hang on to them. Even going into September, I don't know. I don't think anybody wants to give up their Palantir. Everybody knows Palantir is going to go to the moon. And they don't want to give up their positions. Everybody who's given up's given up already. They might give them one more shakeout. I don't know. Look at all these upgrades. Upgrade, 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 upgrade. Their earnings per share, 0.30. Oh my gosh. This was 0.19 in 24. They're already at 0.30. Doubled it. Their sales in billions. What are their bill sales? 3.44. They were last year at 2.87. Shares, they're not buying them back either. Oh my, this thing is a monster. This thing is a monster. If you don't own it, now is your opportunity right now. We got to get into that thing. All right, let's go look at my spreadsheet. And then we got to go over and look at portfolio matrix. I'm anxious to show you how that's coming along. This is my portfolio. And I have been making some adjustments on it, as you know. I'm using September, the bad month of September, just like everybody else has always done historically, to do the rolls, to do the rebalancing. All right. And I'm going to show you how I made my decisions for rebalancing. So this is not really up to date. And I deleted, as I mentioned, complaining because I deleted some out. But this is pretty close. We'll actually can go look over in Portfolio Matrix. It's more accurate because it's got everything. My spreadsheet is just me trying to, back of the napkin type of math. And so we want to come over and we want to take a look at the spreadsheet. But this is real money. This is how I've been tracking my real money. But we've got Portfolio Matrix now. So we don't have to do all this spreadsheet work. Unless you love spreadsheets. If you love to sit here and spend 3 hours a day working on your spreadsheets to update your portfolio, then this is a great little way to do it. But if that gets tiring to you, we have another method of doing it. All right. So I'm going to come over here and I'm going to pull up Portfolio Matrix. And this is Portfolio Matrix. And which one's pulled up right now? Let's go into my UBI account. All right. This is the one that I'm primarily tracking on my spreadsheet. So this one will, so where did my spreadsheet go? So this one here, this is my, this spreadsheet that I'm always showing you guys is my UBI account. All right. What I call my UBI, Universal Basic Income Account. And that's what this is. This is my UBI account over here in Portfolio Matrix instead of in the spreadsheet. So now I've got all the numbers for me up across the top, just like I did in the spreadsheet. I've got all my charts so I can show. This is what you see when you look at, let's say you're using your brokerage firm. This is what your brokerage firm shows you. And this is the reality right here. This little equity window here, your brokerage firm does not show you this. And that's the problem with just looking at your brokerage firm, whether it's Track and Trade or Robinhood or, Fidelity or Goldman Sachs. It doesn't matter who you're brokering with. They don't show you this window here. They only show you this window. And why they do that, I don't know. I don't know. I don't know why they don't show it to you. But this is actually my equity window showing me how much money I'm making. See that white line's climbing? Now it's fallen because I'm doing my rebalancing right now. So all this stuff right here at the end, this is me rebalancing my portfolio. And I'm going to show you my rebalance. All right. So hold on, I'll show you all that. Now here's the trades and dividends. So this is the most important, second most important window. All right. This is showing me my total dividends that I've received this year. See, it says right here, 1 year. So for the last year, and that's about when I started. I started this, if you remember, I started back in, well, you can look on my spreadsheet again. I started back in July of last year with $476,000. That was that right there. All right, 476,680. That was my best guess. Of course, Portfolio Matrix shows you that down here and tells you the exact number right there. It was actually 328,000. I actually put a little bit more in, 400, and see it says right there, 438,718. What did I say? 476. So right in there somewhere is where you can see on Portfolio Matrix, tells you right here. Can you see this window? The little green ones down here. This is where you started for 1 year ago. And then right in here, this is where I started putting in my own cash, and then I started making money and just putting in dividends, so reinvesting. So here's all the money. See this? This is the money I got into the market, and so we had the bad month right here. It went down. Went from on 3/12. What was happening on 3/12? 3/12. No. 3/12. This one here. I want to go back over to here. And I want to go to SPY on 3/12, right there, March. It's this right here. See this big flush in the market right here? And everybody freaked out, right? I mean, I freaked out. We all freaked out. Everybody freaked out. We're like, oh, shit, market's falling. We don't like that. And so down this thing went in March. So if you come back over to Portfolio Matrix, you can see that in my profit and loss. But look what's interesting. This is my dividends down here. It kept going up. I kept making money. Look how nice and clean that up line is. Now that you can't see it. I'm sure you can't. I don't know. Maybe you can see it. It looks on my screen. It looks really tiny, but there's a white line in there. I'm going to ask Ben if he can make that brighter. But see that white line right in there? That's the starting line right here. And then see that starting right there. It's very important. Because as soon as that green line, this growing green line going up, crosses that white line, that tells me I'm at break even. That means that everything I've invested has been now given back to me, and I have no out-of-pocket risk because they've given me everything back. I made 100% increase in my account, which I reached that like today, like right now. I'm there. So I have the money I put in, which is right here, tells me, what was it? $328,984. That's what I call McDonald's money. That's money I went out and worked for. All right. It was in a savings account. I took it and I put it into the market. And over the last year, because it's from, this tells me as of 12/13/2024. So the end of the year. That's when it says it's got data back to me to that point. All right. So that's where I started. From that date to today, it's given me all my money back. It's given me all $328,984 back. So I've made this year in this one account. This is just this one account because I got two more in there. Plus I got other accounts too. But in this account, I've made $328,984 so far this year. I'm at break even. They paid me back 100% of everything I put in. Now, because I take that money and keep putting it back in, I'm still I still have risk. I mean, it's not like I now have that 328,000 sitting in cash in a bank at Cash Valley Bank, right? I mean, it's back into the market. I kept putting it back in. That's how come that green line kept growing so fast, because I'd keep reinvesting my dividends. All right. So that's my investments as I would come across. This is my break-even line right here. And of course, that break-even line will keep going up and down. It'll move. But right now it intercepted. So it intercepted my dividends, my income. That's my income line right there. So as it came up, you can see it intercepted it right there. Now, this is how much money I've got in the market still. According to this right here, I've got, oh, these are all still contributions. So that's not telling me my total amount in. I think my total amount in is up here somewhere. Where's it showing my total amount in? Current value, net value. Okay. I have 662,000 in right now in this one market. 662,000. All right. I put in, it says 537,000. I've reinvested 240,000 of the money that it's given me. And to get that money back, I have to, my break even is 777,000. So that's how that works. Okay, so I've got my original McDonald's money back, but then all the money that it paid me, I put back in. And now to get that back is up here. I have to go up here to get that back. That's 777,000. All right. And it tells me right here to get all that back. It doesn't tell me. That's, the calculation isn't right. Okay. So now we're going to come down here and look at my individual. Now remember, on my spreadsheet, I had all these little columns right here that we like to watch, right? So in January, I made 31,000. February, I made 26,000. In March, I made 27,000. In April, I made 30,000. In May, I made 53,000. All right. So in 1 month, I made $53,000 in 1 month. That was a banner month. All right. Now let's come back over. Those are all right here in Portfolio Matrix, all calculated for me. I don't have to do it at all. I don't need a spreadsheet anymore. So now I come down here and monthly total. There it is, 30,000 for, that was last December. January, 32,000. February, 26,000. March, 27,000. April, 30,000. April, May, $53,000 right there. June, 31,000. July, 30,000. August, $42,000 in August. And we're in September, which isn't complete yet, and I'm currently sitting at 11,000. So I made $42,000 last month. In May, I made 53,000. My lowest month was only $26,000 in 1 month. I only made $26,000 in 1 month. How terrible is that? And you know what? That's just one account. Let's go over and look at my other one. This is my traditional IRA account. So click on that and load this thing up. Now it's got to go out, and it's got to go contact the broker, and it's got to bring all the information in. So let's come down here. So here's another monthly total. Okay, on my IRA, I made 11,000 in January. I made 13,000 in February. I made 9,000. I made 8,000 in April. March, I made 9,000. That's my lousy month. Oh no, look, April was worse, 8,000. I only made 8,000 in April in my IRA. In May, I made 19,000. And then June, I made 10,000. July, I made 9,000. And look, in August, I made 14,000. But that's not really correct, because I got 2 payments in August. For some reason, that gave me a payment. I got payment on the 1st, and I got a payment on the 31st. So I think September is going to actually end up being small, because I think they rolled it into August, and they're not going to give me one in September on one of these markets. I can't remember which one it is. Anyway, that's how that works. So I made $14,000 in August, which will probably make this September small. But you can see this quarter 38,000. And this is now you can click this button here. Boom. I think that'll combine them, and that'll show them both at the same time. Watch this. Come on, baby. Bring it in. Math, calculate it up. It's going and retrieving all of my history. Got to give it a second. Okay, there it is. So let's come down and look at my totals. This is combined. This is both of my UBI account and my traditional IRA account combined. All right. I've also got in here a Roth, but it's got nothing in it. Okay. Nothing to speak of, like $5,000 or something. Okay. So we come over here. Now you can see this is December. So it's too long. Okay. This is January. So in January, I made 44,000. February, I made 40,000. March, I made 37,000. April, I made 39,000. In May, I made 73,000. $73,000 in 1 month. That's a lot of money. To me, it's a lot of money. I mean, I've never made that kind of money before. This is my universal basic income. $42,000 in June, made $40,000 in July. I made $57,000 in August, and I've made so far this month $15,000. That's not bad. Can't complain. Running total so far this year, including December of last year, which was small, 39,000. Well, can't complain about 39,000. But running balance so far this year, and I've still got 3 months to go, I've made $428,000. So my goal, I'm on track to make $600,000 this year, over $600,000 this year. Just from these two accounts. That doesn't include my businesses, doesn't include my real estate, doesn't include all of them. That's just these two accounts. I'm happy with that. Can't complain, right? So that's why I'm here to teach you guys how I'm doing this. You guys want to know? I'm teaching you. Just come here. I'll show you how I do it. Okay, how do we do this? So how do we do this? We go over and we're going to go look at Pit News Calculator. So we're going to go over to Pit News Calculator. All right, so this is at pitnews.com/dividend calculator. And then what I do is I buy these stocks that pay high dividends. And then I use smart technical analysis using track and trade, which I can't get to open today, to help me decide when to dollar cost average in and open these positions up. And then the returns that they give me are based on these tables right here. So you can see in here, if I were to invest in TSYY, it gives a yield of 140%. Now, this I have learned. Now, I'm new at this too, right? I mean, I've only been doing this for 30 years, so I'm still learning. We got our new tool over here at Portfolio Matrix. And if I pull these up, this yield is not the only most important thing, right? We got to also look at the NAV, the net asset value, and how it compares. So we can come over here and we go into this little tool right here, and I can pull up this thing right here. It says TSYY and NVDY. These are the funds that we're investing in. Let's see how many of them we got. We got a lot of them. These are the high yield funds that are brand new. They've only been around for some of them. Well, TSYY has only been around for about 4 months. So these are brand new. So if you're like, I've never heard of these. Well, that's because they've not been around. Or, man, I've never heard of this strategy. That's because it's not been around. The oldest one is only like 2 years old that just barely started doing this. And so they're what we call single stock ETFs. And so what they do is they take an ETF, which is an exchange traded fund, and an exchange traded fund generally has a diversified portfolio in it, right? So that's why you have what we call the MAGs, has 7 stocks in there, and it's diversified across the Magnificent 7, right? Apple, Amazon, Netflix, Google, Meta, Tesla, and Nvidia. All right, that's the MAG 7. So you've got your MAG 7, and if you want to invest in all those, which a lot of us do, like, oh, we like to buy into those companies. Well, you don't have to just go out and buy a little bit of shares of every single one of them, build your own. You can just buy MAGs, right? So you just come in here, you go into MAGS, and you just buy this one stock. It costs $61 a share, And it's not a stock, it's an ETF, exchange traded fund, and it's diversified across. If you come down here, you can see what it's got in it. All right. So we'll come in here, top 10 holdings. It's got treasuries in there, but it's got Alphabet. See, so it's kind of stable. They come in here with US treasuries, 55% of it's treasuries. And that's how a lot of these ETFs work. They have most of their stuff is in treasuries. And then they have Alphabet, so that's Google, Nvidia, Microsoft, Tesla, Amazon, another Alphabet, and then Meta and Apple. And that's it. If you wanted to invest in those stocks, well, there's no reason for you to go invest yourself and put a little bit in each one and try and manage it. Just go put it in here. And then they manage it for you. That one ETF will be invested in those 10 stocks. All right, plus 55% in treasury bills to stabilize it. All right, now if you don't want to have treasury bills, you don't have to. You can just go do it yourself. Just go buy a little bit of all of them, and that would give you a mags. That's what's, the AI push right now. This is the big AI companies right here. They're all in there. Now there's some that are dragging it down, believe it or not. Just so happens to be Tesla. TSLA. It's not doing as well as all the others. See that? Why, Elon? Why? Why, Elon, did you go and become political? Why? So that one's kind of dragging it down a little bit, but that's it. It is what it is. I don't know. How many are they making sales? 92 billion right now. The 97 billion last year for the whole year. We still got 3 months to go, 3.5 months to go. 92. Do you think he can do it? What's 97? Well, we could do the math, but it's pretty close. It's pretty darn close whether he's going to make it again. If he's going to make 97 billion this year. Earnings per share has gone way down, 204. What are they right now? 173. See, Elon? Doggone it. He's going to come out with his little robot. He says his robot's going to be better sales than the car. He says they're going to make more money selling robots than they will selling cars. Are you guys going to buy one of his little robots? We're all sitting there going, I ain't going to buy one of his robots. What would I want one of those for? Well, I said the same thing about a Tesla car. I ain't going to buy. I don't think I'll ever buy one of those self-driving cars. Why would I'll never be able to afford that self-driving car. I got one now. So, things come along. Maybe one day we'll all be buying Tesla robots and they'll be working here in the house with us. Or if you have a business, they might be working at your business, right? That's the thing. Rock says he's buying one. He says, no way, man. I'm all about it. $13,000? 1,300? You think that's what they're going to cost? I heard him say that the first ones off the assembly line are going to be like $200,000. 200,000 or $250,000 for one Tesla robot, but I don't know. That's just rumors. He said they're supposed to get down to around $30,000 a piece, right? Are you saying $13,000 a piece or 1,300? I don't know. He says that he's going to get them down to where they're affordable, that everybody can buy them eventually, but initially they're going to be expensive. It's going to be a lot of fun to see. It's moving fast. It's moving fast. But this is a little disappointing in Tesla right now. And so Tesla, because Tesla has been going sideways and hasn't been rallying, nobody's been jumping on the Tesla bandwagon. I actually think people still love the Tesla cars, and they're still selling them as fast as they can make them. Roxanne, he asked Tesla, yes, who'd you ask? Did you ask Grok or did you ask ChatGPT? Because you got to be careful on who you ask. All right. So if we look at the list, Tesla's fallen way down the bottom of the list. Look, Tesla used to be at the very top. Now this is Tesla. This is TSYY. This is not. This is our. It's got the star by it. So this is, what's the company? Grant Shares or something. Super Grand or something like that. I don't know. But look, TSLY, which is the one that we've all made so much money on, is clear down here at the bottom of the list right now. It's only got a 12% return. Only a 12% return. That's a little disappointing. So I don't know. We can sit and hang on to it forever, or we can roll out of it and roll back into it when it starts to move again. Right now, it's got no volatility. It's just dead. NVIDIA's got some good volatility up here at 113. This table probably needs to be updated. But March 27, last updated January, March, that's not right. I updated this since then. That thing didn't get updated. I updated it last month, so it's about a month old. This is about 1 month old. That's got to be updated. That says March 27. That's not true. Okay, so let's go look at some of these. These are the different individual single stock ETFs, and you come and put your money in them. And then let's go look at NVIDIA, for example. It's giving you 111% return. That's a NAV, or no, that's dividend yield of 111%. So basically, if you put $10,000 in there at the end of the year, you're going to have $10,000 back. That's pretty good. The problem is it's not taking into consideration that the asset value drops itself, the net asset value of the stock. So we have to go take a look at that too. And so this just looks at the yield. And so you can see which ones are the highest yield. And so you're like, well, I want to be in TSYY. It's got 140% yield. Yes, but we have to come over here into track and trade, or not track and trade, into portfolio matrix. And we have to pull that up, TSS, TSYY, and look at what it tells you, because you don't see this otherwise. So this is the NAV, TSYY. Now this is brand new. And there's something I want to show you about all of these new ETFs. They overvalue them when they first put them out. Way overvalue them, just like every stock, just like every IPO, right? They always way overvalue every IPO, and every IPO, almost 90% of them flush, right? We all know that. It's not wise to buy into an IPO because they flush. They toilet flush on you. And so these things have been doing the same thing, all of them. But then they stabilize, and they start just kind of going sideways, and some of them even go up. I mean, if you go look at Palantir, let's go look at Palantir, PLTY. Now, this isn't PLTR. PLTR is the underlying stock, remember? So we got two. So look, even Palantir just gone sideways and even went up. Right in here, it even went up. But why doesn't it go up? Go look at PLTR. No, yeah, PLTR, and you'll see this is Palantir itself. Now there's no dividends. They don't give dividends. So this little chart here in Portfolio Matrix shows you both the net asset value, and it shows you the dividend. All right, net asset value and the dividend. So the gain on this thing, look at this. This is Palantir outright, 349%. So if you'd have put your money in this thing last year, you'd have been up 349%, which is unbelievable. All right, that's like, wow. And that's why it's all the rage, right? That's why we want to get our money into this thing. Now, I sold out right here at the very peak, right there. I sold everything I had right there at that very top peak. And so I'm waiting for my opportunity to get back in. It looks like I should probably be getting back in a little bit in here. I don't think it's going to flush much more. See, last time we had this huge run up like that, it flushed pretty good, and then it kind of went sideways. That little thing's kind of in the way, isn't it? So it kind of goes sideways. It went a little sideways, and then it took off again. I wonder if we're going to get kind of that same thing going into through September. We could probably start adding in a little bit into here in anticipation. But I would, kind of, I don't know. I like to see 50% retracements. I think there's some more downside potential. But with this stock, 349% growth, I don't know if and they're just getting started. I mean, they're just getting started. This is a new company. Of course, they're in the AI world, right? But what they've done is they've started to sell their AI services to the federal government and, man, into the U.S. military. So PLTR, this is one hell of a stock. So that's why we're looking at this thing. Let's come down here and look at this. So we already looked at it once. Their sales, $3.44 billion. They've almost doubled it. No, they haven't. 3.44 is not double of 2.87. But look at that. Their sales, that's currently right now, they're at 3.44, and they've still got 3 months left to go, 3.5 months left to go. And their PE ratio is 0.30. And this thing, and they're not buying their shares back. They're distributing shares. That should cause shares to go down. Anytime they buy their shares back, anytime this little chart right here, shares outstanding, if this goes down, that'll cause the stock to go up. If this goes up, that'll cause the stock to go down. All right. So sales in billion, of course, if that goes up, the stock goes up. This goes up, this goes up. This goes up, that makes the stock go down. Actually, if this goes down, this makes the stock go up. This goes just the opposite. If it goes up, it makes the stock go down. And it's been going up, and the stock's still been going up. They could push it even higher. Just craziness, crazy, 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 crazy. Everybody's upgraded this thing, of course. So we got to get back into this thing. But it gives you a good return. See, Palantir will come down here. Where's it at? PLTY right there. It gives you 86% yield. So if you were to put your money, 86%, what's that? You put your money, put $10,000 in there in about a year and 3 months, you'll have it all back. You'll have almost 100% of everything you put in back. And then you have no out-of-pocket risk. Just like I said in my portfolio, right? I came in here and I said, look, I got no out-of-pocket risk. It's giving me everything back. So these are the funds right here. These are the ones right here. These are the funds that we're choosing from. Now, last Thursday, I told you, I already went down through this entire list. I went over to Portfolio Matrix. I pulled up every single stock that's in that list, right? That's in this list right here, which was updated last month, not March. It's been updated just like 4 weeks ago. And so I went through that every single one of these in this list, which are these brand new single stock futures, or not futures, sorry, single stock ETFs, exchange traded funds. Now, the thing about them is they're an exchange traded fund is generally a basket like Mag 7, but these, they only put one stock into them. So they put the underlying stock into the ETF. So for example, the Palantir PLTR is the stock itself. So if you want good, strong growth NAV, go put your money in PLTR. You're going to get that 300-400% growth, but we didn't know it was going to grow like that. So we were happy with 86% growth. Only 86%, that's the yield. So we put our money into PLTY, and right now I'm going to go put my money in PLTY. I'm not going to put it in PLTR. Why? Well, PLTR is this one. That's this one, PLTR. And yes, it had the 349% gain last year. But is it going to do that again this year? I don't know. Am I willing to say I'm going to go for a 349% return when I know that I can get, oh, not that one. When I can get pretty much 86% return? 300, maybe. 86, pretty confident. I think I'm going to go for the 86. 86% return is really good return. When you were looking at my portfolio before and I was saying, I made $50,000 last month, you were pretty impressed. But now you're looking at 349% return. You're saying, I ain't impressed. So, okay, what are you going to do? All right. Notice that PLTR has no yield. You get no dividends from it. You just get strictly growth, all growth. But if we go into PLTY, all right, PLTY, the gain was only 18%. That's all we got. 18 when it really did 340, but the yield was 75% last year. So we got 75% yield. 75%, that's you're not going to get that down at Cash Valley Bank, right? Go down to Cash Valley Bank and say, I'd like to put my $10,000 into a CD and I would like you to give me 75% return on it. I don't think so. I think you're going to probably get maybe 3.5. And they're going to lower interest rates coming up here. So you might get 2.5, 2%. But we average in 75% right now out of this. All right, plus 18. So you're getting a total of 93% annualized return. Now, they all didn't do that well. Obviously, this was a banner stock. So if we go look at Tesla, we can go look at Tesla, which didn't do that well, right? TSL, and TSLA is the actual stock, right? Now, Tesla had 53% growth, all right? So our Palantir ETF outperformed the Tesla stock, right? But they have no yield. Tesla doesn't give you Doesn't give you a dividend. All right. So we have gain plus yield, 53%, 53%. There's no difference because there's no yield. They don't give you. If you go over here, pull up Tesla, TSLA, see that there's no dividend. No dividends. Earnings, but there's no dividends. No little circles down here. But if we go over to TSLY, which is the dividend version or the single stock ETF. Now, when they trade this, they don't go and buy the stock itself. You have to start running these ideas through your head. You're like, well, why would they do a single stock ETF? Doesn't make sense. Why don't we just go buy the stock itself? Instead of if they only put in one stock into the ETF, why would I do that? Because they don't buy the shares. They trade Tesla with options. All right. So that makes a big difference. They're trading with options. Now, you're also looking at it and you're saying it's going flat sideways, and it went down, and it's going flat sideways. I mean, Tesla's going flat sideways. It's not going up. But this is really flat sideways. But see the little circles in here telling you that they're giving you a dividend. Now, look at the dividend on these things, 30 cents per share. So I want you to always remember they pay you your dividends based on the number of shares you have, not on how much you paid for them. All right. So it's not irrelevant how much you paid for them, because you want to always have, you want to buy them as low as you can. And of course, you'd like to see them increase, but that's not really where you're making your money. You're making your money off of the yield, because you buy the shares and then they take the yield, and it doesn't need to grow. This stock doesn't need to go up for you to make money. In fact, it's better if it doesn't go up, because the reason it doesn't go up is because every time they make money, they take it out and give it to you. So this TSLY is not actually a representation of TSLA. It's only a representation of the amount of money they've got holding, and what the money, the basket or bucket of money they've got, is being traded with options on TSLA. Now, if you don't know how options work, that might be confusing to you. But as soon as I say that to people who trade options, they're like, oh my gosh, that makes a lot of sense. Because when you trade options, you don't actually put the money into the market. An option is the right, but not the obligation to buy the underlying stock. Therefore, you don't have to put your money into, you don't have to actually buy the stock, right? If you have the right to buy the stock, but not the obligation, that's an option. Well, if I don't have the obligation, that means I haven't put my money into the stock. So where's the money? It's sitting right here in TSLY. So it never does get invested into TSLA. It's just the right, but not the obligation. So I have the right to buy Tesla, and because of that, now if I were to be buying options, I'd have to pay for them, right? But when you sell options, somebody has to sell it to you. If you buy an option, somebody had to sell it to you. So if they sell it to you, you have to pay them for it. So the premium that you pay them for an option goes to the seller. So you pay them for the option. Seller gets the money. 80% of options all expire worthless. That's a pretty well-known fact. All right. So that means 80% of the options lose money, and the person who sold you the option and collected that premium gets to keep the money. That's what these funds are doing. So they're not obligated to buy the underlying stock. They're selling the premium and collecting it. And yes, sometimes they lose, or sometimes they don't make money. But most times they make money, and that money goes back into TSLY, not anywhere else. It goes right here. But then what do they do with it? Well, these little circles say that every month they give it to you. They take it out and they send it to you. And what do you do with it? Well, you take it and go buy Tesla cars with it, or go buy a motorcycle, or you go buy food, or you go buy a house payment, or you go buy candy, or you go on a trip. You spend the money. So because you spend the money, it's not there in TSLY anymore. That's why TSLY doesn't go up in value, because they take the money out that they made in TSLA trading options and they give it to you. If they wouldn't give it to you, these markets would go straight up. If they didn't give it to you, these markets would look like this. TSLY. All right. This is what would happen if they didn't give it to you. This is what these markets would look like. Just like PLT, PLTR, no, PLTY. It's a good example. Look at that. That's what this market would look like if they didn't take the money out and give it to you. It would look like that purple line. That's what that's telling you. Oh, is this market making money? It's making money hand over fist, 75% return. Well, 75% isn't as good as PL did 345%. That's true. You should have been in that one. But did you know it was going to do that? No, you didn't know it was going to do that. Tesla didn't go up like that, but Tesla still made a ton of money. All right, let's go look. TSLY. So the reason it doesn't go up, see, Tesla still made 83% return, and it went nowhere. That's pretty cool. All right. Tesla went nowhere, and they still paid you out in the 83% return. So what happens is that the market, they sell the options, and the options go to you. And if you turn around and put it right back in, well, sure, you can put it right back in. You can just take it out and put it right back in. But they take it out every month and give it to you. But then you would have to put it back in. Now you can do what they call drip, which I don't recommend. I don't think you should drip. Now, if you're doing little tiny ones, like if you're with AT&T or something, and they give you these little puny, little worthless, well, AT&T's isn't quite worthless, but almost. But like Apple, for example, they give you a dividend. Drip it back in. It's not going to make any difference because it's such a tiny little puny piece of worthless amount of money that the market will move this far and blow it out of the water. So why bother? But these are not why bother. 83% return is not a why bother number. So if they're going to give you an 83% return on your money every month, right, for annualized, you should think about where you want to put that back in if you want to reinvest it. If you're not going to take it out and go spend it and buy you a new Tesla with it, then you should think about very strongly about where you want to put that back in. It's a lot of money. So you don't want to just say, oh, well, I'll just drip it back into the same thing I just pulled it out of. Well, then why did you pull it out? If you're going to pull it out, why just throw it back into the same thing you just pulled it out of? You shouldn't have pulled it out. Just go put your money in TSLA. The whole reason we're putting it in TSLY is because they're going to pull the money out every month and give it to you. So you can make a decision with that money and decide what you want to do. Now, if you decide that that's the best thing to do is to put it back into Tesla, go ahead and do that. It's not what I do. That's why I have these fancy spreadsheets, right? Because I'm coming in here and I'm getting my money pulled out. So every month, like in this one here, for example, MSTY, well, they gave me $7,000. That's not a drip. I ain't going to drip that back into the exact same thing I just pulled it out of. Why would I pull $7,000 out and then just turn around and put it right back in? What's the point? Just pay taxes on it. So what I do is I take that money and I strategically put it back into the market, which is why we look at technical analysis, right? We come in here and we say, well, which stock is going to rise? I want to have my money in markets that are going to rise because I'm still worried about the NAV, right? The gain. I still want good gain. Now, look, this is Tesla, and they had negative gain, minus 40%. So the stock lost 40%, but because of the yield giving you 83%, you end up with an overall 42%. 42% is still a lot of money. Can't go down to Cash Valley Bank and say, I'll put this in here for a CD for 42%. Where else are you going to go get 42%? You're going to open up a coffee shop. You're going to open up a tire shop. You're going to open up a computer store. What are you going to do that's going to return you 42% while sitting on your hiney? With where? Tell me a business that you can go into where you're going to make a 42% return, and I'm going to go open that business because that's a good business. My businesses didn't make 42% return. I never made 42% return. My father had 8, 10, 14, 15 businesses. Had Radio Shack, Western Auto, had a restaurant, had a couple hotels. He had about 16 gas stations. I mean, that was my dad. Not one of those businesses ever made 42% annualized return. He's lucky if he could make 10 or 20. We were working on, we could get up to 30% on some of those things. But 42% return? I don't know. Maybe you had a business that was making 42% return. But what did you have to do? You had to hire employees, you had to have buildings, you had to have clients, you had to customers, you had to, whatever you were doing to get that 42% return, you had to work your hiney off. This, you just give the money to these guys. They go in and they sell options on Tesla for you. You don't even have to go sell the options. They do it for you. They're probably better options traders than you are anyway. Damn better. I'm a pretty good options trader, and these guys can kick my butt. They can sell options better than I can. And I've been doing options for years and years and years and years and years and years. So that's how they make their money, is selling options, not from the growth of the underlying stock. All right. That's true. If we could all be Nancy Pelosi. Did you hear that? What's her name? Luna? Luna is her last name. Luna, the sexy little congresswoman that we've got in there now that owned a swimming suit company. You ever seen her? She owned a swimming suit company, or worked for a swimming suit company, worked in a partnership in a swimming suit company. She was the model. So now she's Congress. So she's in there passing a law that makes it so that Congress can't trade single individual stocks. They can only be in mutual funds and ETFs, diversified portfolios. They're not allowed to trade individual stocks anymore. We'll see. Do you think that'll ever pass? I don't think it'll ever pass, but she's trying to force a vote on it on the floor, and it's supposed to happen at the end of the month. So we'll see. If they force a vote, you'll see who refuses to pass that law. See who all the crooks are. All right. And anyway, that's how these things work. And so that's what this list is for. So that's why it's important to have this list. But now I'm going to show you my list. I've already gone down through this thing, as I said. I've gone down through this entire thing, and I've brought up my list, and I've put my list right in here. These are my favorite ones that I call my dream portfolio right there. All right. So I got to get, well, you can see it. I'm not in the way. You can see my dream portfolio. Let's close up some of these. We'll bring them up a little closer. So these are the ones I want to be in. All right. BITO, OARK, Misty, Hoy, Tesla, Snowy, Palantir, Coney, NVIDIA, and Beatty. All right. So that was last Thursday. Remember, I showed you this paper, and I went down and I wrote them all down, wrote everything down, went down through the whole thing, and did all the homework for you. So it's already all done. So this is the top performers. All right. In every single one. These are the top performers. And there's more, obviously. These are just the top performers. Now, this is top performers not only on the yield, because the yield is calculated for you here, right? The top performers on the yield are in this little table. But this little table doesn't take NAV into consideration. And Portfolio Matrix does. So now we can come in and we can look at this one. BITO gives you a gain of 9.84 and a yield of 51 for a total gain plus yield of 61%. That's pretty darn good. 61%. All right. Now this is past performance. So past performance is not necessarily indicative of future results, but it's the best we've got. So we can work off of this for now. Now what's cool is you can come in here and I can create my dream portfolio in Portfolio Matrix. All right. And then I come into this set targeter. Now, this is what I've done, and I want to show you my spreadsheet again. I'll just pull up my spreadsheet and show you how I'm doing this. I'm not telling you guys what to do. I'm just telling you what I'm doing. And if you want to kind of learn and try to do what I'm doing, somebody who's making $50,000 a month, that's probably a pretty good guy to learn from. I don't know. You might be able to find somebody else out on YouTubes that are teach you for free how they're making $50,000 a month. Okay. But, not telling you what you should do. I'm just telling you how I do it. So this is my little spreadsheet here. I call it my core allocation. So what I've done is I've gone through and I've found all these ticker symbols off of that list that I showed you that shows me what I want. And now I'm coming here and this is what I want to do. This is how much money out of the money I've got that I want to put into each one of these. John says the software's back up. Good. So if we're going to go look at it, we'll use it in Track and Trade. It's a lot better than that other little program we were trying to use. All right. So then this tells me I went through and I had Grok help me decide when to roll, because I was going to roll it over. But Track and Trade, not Track and Trade. I keep saying Track and Trade. It's Portfolio Matrix gave me all this information, and then I figured out when I'm going to roll it from the old one to the new one. All right. And so on Wednesday, you can see I sold, I trimmed, what did I do? I sold BITO, sell account BITO 30,000. So I sold out of some of my BITO. On Monday, I'm selling, so I sold some Tesla and some NVIDIA, and I bought SNOI and I bought OARK. And then on my traditional IRA, trimmed Tesla down and I bought some PLTY. So I actually got a little PLTY. Now I've got this calendar set up. So on September 9th, and the reason I'm doing this because I don't want to liquidate my positions to roll them into the new positions, because I'm rebalancing my portfolio, but I don't want to just rebalance it all at once. I don't want to pull something out just as it's about ready to give me $8,000. Because if I pull it out 3 days before it's going to give me my $8,000, why would I just lost $8,000? So this calendar is all set up the way I've got it set, and I had ChatGPT help me. Actually, I had Grok help me decide when I should do all these changeovers. So today is Tuesday, September 9th. I'm going to buy some more Palantir, buy some NVIDIA, and I'm going to sell some TSYY, and I'm going to buy some BETE, B-E-T-E. All right. So, and then on my Roth, I'm going to sell some Palantir and buy some BETE. I thought I just barely bought BETE at Palantir. Why is it selling? Oh, I'm moving it out of my standard account over into my Roth. So I'm moving money out of my standard on Palantir. I'm moving it out of the standard IRA and put it into the Roth. Why? Because it's tax deferred. So I'm taking all my real big, expensive, high dollar ones. I'm pushing them all into my Roth, or not my Roth, into my traditional IRA, so that I don't have to pay. So it's not pulling them out every month and making me pay taxes on them. So all the smaller ones that kind of stabilize my account, they'll be in the, I pay smaller taxes. So that's why I'm doing that. All right. So this is my portfolio of how I'm getting in and moving out, moving my money. This is it'll take me all the way to the end of the month. September 30th, I'll be buying NVIDIA, Coney, Hoy, and Palantir. And so you can see I'm moving the money. It's not all at once. I'm moving it around. Now, where did I get this from? I got this from this little portfolio thing right here in Portfolio Matrix. So now I come in here and I have my dream portfolio, and let's say that I've got $1 million. I'm going to put $1 million in here, and I hit apply and view, and I'm going to do it based on combined gain and yield and apply. And that's how I figured out how much money to put into each one of these, because it tells me based on relative performance and the combined yield and the income. That's what this little calculator here does. This is a little calculator. It tells me where to put my money to maximize my potential. So you can see I'm going to get a gain plus yield if I put my money into the top 10 from that list, right? This list, I pick the top 10, and then I come over here and I put it in here, and it tells me how to distribute it to get the highest return, which is 64%. So if I can get 64% return on my money, that's better than if I went out and bought a coffee shop or a bowling alley, or I don't know, computer store, telephone store, I don't know, restaurant. Maybe I could get, a McDonald's restaurant, but how much would I have to put in for a McDonald's restaurant? And then I got to run employees, and I don't know if I could make 64% return on my. I don't know. Jay says, just here. This is where we do it. This is where we come and get this money. Thanks, Jay. That's kind of you. So anyway, 64% is what my portfolio is supposed to be making going forward. Once I get this rebalancing done. So this is the total rebalance of because I got $1 million, right? I'm going to put $1 million in because I started with 500 and I'm now up to almost $1 million. So I'm going to put $1 million in, and I'm going to put it in at these ratios. All right. And then what I'm going to do is I'm going to hit save target, and it's going to say 64.8%. And this is where I went into that little kind of example last Thursday where we talked about algebra. Remember high school algebra? And you were like, okay, I'm never going to use this. No, actually, you use algebra almost every day. Algebra is any mathematical model that has an equal sign in it, all right, which is almost everything, right? So 1 + 2 = 3, that's an algebraic equation. So what you're trying to do is you're trying to solve for equals. So whatever's on the left side of the equal sign has to match what's on the right side of the equal sign, right? Remember that? Remember that out of algebra? So 1 plus 2 equals 3. That's an algebraic equation. Now, what if you don't know what's on the left side? You got 1 plus x equals 3. Now we have to solve for x. Remember that? Remember I'm saying solve for x. Well, all that means is it says we have to figure out what's on the left side of the equal sign, so it equals what's on the right side of the equal sign. And you're going to solve for x. So 1 plus 1, does that equal 3? No. So we haven't solved for x. So now we're going to come back and go 1 plus 2 equals 3. Does that what's on this side of the equal sign? 3? Yes. Okay, we solved for x. We now know that x is 2. That's an algebraic equation. Now, we as humans don't do that very well. When it gets a little bit complicated, where our brains get hurt, right? Oh, I can't solve for x, because we don't only have x. Sometimes we have x, y, z. We have a, b, c, d, e, f, g. We have all kinds of things. X, x, x. We can have lots of functions over here on the left side to make up our equal sign on this side. So that's what all these are. All right. This is solving for 64.80. Now, I didn't know what 68.40 is. I just wanted the biggest number. So I said, take this computer and figure out all these things that are on the left side of the equal sign, which are all these. This is A, B, C, D, E, F, G, H, I, J, K, L, and solve for X, which is over here on the other side. I don't know what any of them are. All I know is we're going to use Biddo, ARC, Misty, Hoy, and I want to know how much money based on this $1 million that we need to use to get the biggest number on the right side. All right, so that's what it did. It did brute force mathematics to go through and say, okay, if I take these and it just sat there and put the numbers in and broke them all up until it got the highest number it could possibly get, which was 64.8%. That's the maximum amount of money it could get. So it's doing kind of a curve fit, but that's okay. We're going to curve fit because we're going to adjust this every quarter. That's why you do a rebalance of your portfolio every quarter. Every 3 months, you're going to rebalance your portfolio. So you're going to come in, and in 3 months, you can come back in and do this exact same thing. Say, how much money do you have in your portfolio? You can hit this button and it'll tell you how to rebalance it so that it gets back to 64.8, or at least to the highest number possible. Okay, so we can continually rebalance our portfolio every quarter. Now, the thing is, what if I'm going to add more money in? What if next month I get a bunch of dividends? What if they give me $10,000 in dividends? Well, I want to put that back into the market. Well, where do I put it? Do I put it into Biddo? Do I put it into ARC? Do I put it into Misty? Do I put it into Hoy? Plus, I went out and worked at McDonald's, and they gave me a bunch of money. So I want to put that in too. So now I have this $10,500 that I want to put back in, my dividends plus my money. Where am I going to put it? What do I put it into? Well, you hit Save Target right here. You come over to this little section here, and you say, how much have you got to invest? Well, I got $10,500. And you hit Calculate Your Investment, and it tells you exactly where to put it into. Tells you where to put your dividends, so you get them, so you can maintain that 65% return. And it tells you where to put your McDonald's money, because you put $10,500. That's how much we're going to reinvest, and it tells you exactly where to put it. Back into Palantir, Misty, Biddy. This is how the pros do it. All right. So when Ben went and got his Series 65, this is what he learned. And then when he went and started working for these big companies, this is what he learned. He's like, all they do is this, Dad. I learned this. They do this. We could do this ourselves and not charge people $25,000 to hit calculate and reinvest. They could do it themselves. We could just give them the software that they have at Goldman Sachs. And this is all they're doing at Goldman Sachs is you come in and you say, well, I got $1 million I want to invest. Well, they show you, they behind the scenes, they pull up this little piece of software right here and they apply it. And they say, this is where we're going to diversify your money into this rack of portfolio. And then every month when you have more money you want to invest, we're going to come over here and we're going to click this button and I'm going to tell you where to invest it. So all you have to do is pay me $25,000 a year and I'll tell you where to put all this money. Put your money. That's what they do. So he's like, Dad, we could do this. I went and got the education, went and learned from the big companies. That's all they do. Why don't we just do it ourselves and help people out so they don't have to pay those great, big, huge, massive fees that those big companies do when all they're doing is just hitting a little calculator like this. So I said, let's do it. So we recreated the software that they have at Goldman Sachs to do your portfolio management. That's all these little formulas are. That's what they use. And that's how they do it. So you can do it yourself. That's what I did. And that's why I have my portfolio. And now we can come out here and we can see my portfolio. And now I'm going to be able to do a lot better because this has been shooting from the hip, right? For the last year, I haven't had this software. I haven't had Portfolio Matrix. I've just been doing it from my own personal 40 years of experience knowledge and done pretty good. But now I'm hoping that I can do even better, right? I mean, I can't complain about $39,000, $44,000, $40,000, $37,000 a month. I've been doing okay. I've been doing all right. But now I'm excited to see what I can do next year. See if I can outperform it. See if with all these extra tools that I've got and the ability to see, have a little bit clearer vision and view of everything that's going on, see if I can't do better. So my goal is to make $1 million a year. I'm at 600,000 right now. I only have to better myself by 400,000. And I think I can do it. I think next year, I think by the end of next year, that's my goal. I want to, by the end of next year, be making $1 million a year doing this. Now, are there factors that could screw that up? Yeah. Amy Coney Barrett could screw it up for us really bad. We all know Amy Coney Barrett. She's the snake. Whenever Trump was telling his stories in the election time, he would tell the story about the snake. How many of you remember the snake story? Well, and then he put the snake into the Supreme Court. Her name is Amy Coney Barrett. She's the snake. She's going to come back and bite his ass. You wait and see. I'm really worried about it because it's going to the Supreme Court on whether he can do his tariffs. And his tariffs is what's saving our sorry asses right now. It's paying down the debt. It's all this negotiation that he's doing for free trade and all this trade agreements and everything he's done for his whole turn the economy around is on the line right now. And it's all coming down to whether Amy Coney Barrett is going to let him do his tariffs or not. She's the deciding vote. The whole world sits and waits for Amy Coney Barrett to decide whether Trump can do his, because if she says no, then that means the Supreme Court has said that he can't do his tariffs, and he's going to have to refund all the money that the United States has collected from all these other companies or from all these other countries. All the money that's been coming in, helping us pay off all of our debts, all the goals and the aspirations that Trump has for the country to go, and anybody under $200,000 a year doesn't have to pay income taxes because we're going to pay it with tariffs, trade agreements. All that goes away. Amy Coney Barrett is the one that gets to make that decision because she's the one, and she's on the record having said she ain't going to do it. So I'm really worried if she says no, what's going to happen to the stock market? I don't know. Trump's going to certainly be crying in his beer, and so are the rest of us, I think. I don't know how we're going to pay off that national debt if she says no and makes us actually pay all those tariffs back, give them all back to all the countries that we took them from. Those millions, billions of dollars that we've been bringing in, she's going to make them give it back. Scared to death on that one. It's supposed to be this month that they're maybe towards the end of the month, maybe October, that they make that decision. Scary stuff. All right, guys, that's all I got for you today. Let's go play with the AI a little bit. It's always fun. I got something new here for you. I did. A lot of people been asking about my whether I help one-on-one, and I do. I have some one-on-one stuff. So if you want my help, ask questions privately, book a free bull session. You can go and visit landturner.com. Just go to landturner.com and it'll pull up my, let's see, we'll go do it right here. If you go to landturner.com, I switched it over, I think. Landturner.com. That's me. So you come here and you say, contact me right here. Click this little contact me button. And it pulls up this little window here. And this is my calendar. And this is where we come in and you can work with me. This is my consulting coaching program. And I used to do it to consult with me. You used to have to pay like $5,000 and buy a subscription service for a full year. That was the President's Club, right? That's this one right here. But then I decided that a lot of people don't want to do that. They just want to talk to me for once or twice or for a month or something and work with me a little bit. So to make it easy, I do this one free bull session. So anybody can call me, we can talk. We'll do this once, you call me and we'll talk for free for 30 minutes and ask about what are your goals? What are your aspirations? What software tools are you using? I can answer any questions. It's not a sales thing. I don't have anything to sell. I'm not Pit News Magazine, $39 a year. That's the only thing I have to sell. Well, and Portfolio Matrix. I mean, if you want that, that's like $25 a month. But it's not like I'm selling you a big $10,000 thing. That's not what I'm doing. I'm just saying if you want some help one-on-one and you want to ask questions, I've set this up so you can ask questions. So for 1 hour you just want to come and talk to me this is 30 minutes. This is where we work together. 30 minutes is $55. You just click that and you sign up and I'll call you on the phone and we'll talk. If you want to work for an hour for a screen share, you want me to get on, look at your screen, work with you on your software, that kind of stuff. It's $150 for an hour. 2 hours, $199. For 2 hours, we'll sit there for a couple $100 and we'll work out your whole thing for you, help you with everything you need. I can't do it for free. I mean, why would I? I make $50,000 a month. Why would I do it for free? I'm doing this for free. You can get all this stuff I'm doing on YouTube, but if you want personal one-on-one help, it's not worth my time to do it for free. So I got to charge for it. And then if you're a university students at Utah Tech University, I've committed to those guys. They come and they enroll in my class and my course material. I'll work with you guys. No problem. Free. Well, it's not free because you're paying for the university class. And then if you rent a course or you buy a course from me, if you go to landturner.com and you go to one of my courses, you can get a course and then I'll work with you. That's prepaid as well. And then this is, of course, the President's Club. If you want to buy into the President's Club, you can. It's $5,000 and then we work together for a whole year. But that's up to you. Depends on what you want to do. I just figured if you guys want to talk for an hour, you can come and talk to me for an hour or a couple hours and we'll work together and set up your portfolios for you and set up your spreadsheets and get you all going. I could help you do that. So that's how you do that. So if you want, I don't care if you do it or not. It doesn't make any difference to me. So I'm just offering it as a service. All right. Something you can do if you want. And that's that. All right, so back to here. So there you go. That's how you do it. Just go to landturner.com, or if you got your little cell phone, you can scan that little thing right there, that little box, put your camera phone up to it and put your camera up there and don't take a picture of it, but just point your camera at it and it'll give you a little link. You touch it and it'll take you over to this. It'll take you to this page right here on your cell phone. All right, so there's that if you want that. Also, Portfolio Matrix. You got to go get Portfolio Matrix. But let's just play with AI here for just a second. Let's do this one here.
Ready to level up your news game? Welcome to Pitt News Magazine, where stories come alive. Read it, hear it, or watch it in our YouTube classroom. Right now, get your first 2 issues for just $1. Yep, only $1. Don't love it? Cancel anytime before the $39 yearly fee kicks in. Try it out, risk-free. Satisfaction guaranteed, or your money back. Visit pitnews.com. That's pitnews.com. Pitt News Magazine. News your way.
All right. So Pitt News Magazine, that issue came out. We just got our recent issue, the September issue. So there's the September issue. Everybody needs to go get Pitt News Magazine. There's some really good articles in here. United Healthcare. So we had a whole article about United Healthcare. Just go over to pitnews.com. It's $39 a year. And look, everything's got a recording. So every article is recorded so you can listen to them. So this is when we did the YBIT versus BITO. And we talked about those two funds and why you'd want to be in one or the other. You could put a little in both, but why you'd be one or the other. Covered calls, put spreads, and the new frontier of UBI. So this explains a little bit about that stuff we talked about in class today. And then there's an audio, so it reads the article to you. So all kinds of really fun stuff in Pitt News Magazine. There's my book. If you want to go get my book, go just search Lan H. Turner. You hear me say all the time, like a train on rails, straight out of the manual. Well, here's the manual. If you want the manual, go search Lan H. Turner on Amazon and you can get the manual. All right. Full Delta, no drama. This is another article by Aidan Gray in the magazine. He talks about the entry points for his options strategy. It's a really good magazine, you guys. If you don't have it, you should go get it. What's basis points? Doc Brown talks about that. He's like, somebody was using that basis points. I don't think it means what they think it means. And then I had this little thing with, that's my car. I put that in. How much do you have in your checking account? I just run into it. I put this in here because it was funny. But then this is what I just showed you. You can come. This is where you can get the information to come and work with me one-on-one. And then this is where we get the curse of September, Wall Street's most dangerous month. So September is historically a very weak month. So we talk about that. We always have a seasonal section. And then we give seasonal recommendations, trade recommendations. So that's always in the magazine. You always get these seasonal trade recommendations. Tell you which stocks are hot and which ones are not. And then we got, of course, we've got Pit News on Air from Claire. So that's in here. We always got a cartoon. I'll show you the cartoon. It's funny. This is Elon, of course, taking off on his little spaceship. He says, off to Mars, much safer and easier than Washington, D.C. So he's out of there, leaving Washington for Mars because that's easier. And then, don't show you the key to the secret game. All right, that's it. That's Pit News Magazine for this month. Hopefully you guys will go over and subscribe and come and join us and be a part of the club at your club magazine. All right, that's all I got for you today. And we'll let you go. Oh, let's have Claire do her little thing. Let's do this. We'll end with Claire.
Okay, quick question. Are you subscribed to Pit News Magazine yet? No? Really? Then what are you even doing with your life? Here's the deal. Pit News on Air is like the espresso shot. Quick, a little chaotic, and probably too much of me. But Pit News Magazine? That's the full latte with oat milk, cinnamon, and that fancy latte art you pretend not to care about. Subscribe to Pit News Magazine at pitnews.com. Because if you like hearing me panic about Fibonacci levels, wait until you read what the pros are actually writing. And don't forget to follow my weekly podcast, Pit News on Air, where we take the best of the magazine and bring it straight into your ears. Do it now. Seriously. Because if you don't, Mr. Turner says I have to come to your house and personally explain options trading, and nobody wants that.
That is one sexy little cartoon. I don't know how come you can make a cartoon sexy. I remember when was that rabbit show? Roger Rabbit. Remember Roger Rabbit? And they had the sexy little cartoon in that Roger Rabbit, and everybody was so embarrassed. They're like, that's so embarrassing. I told Claire, I said, Claire, I can't put this up there. She goes, it's not church. This is YouTube. It's not church. I can have a sexy cartoon if I want to. All right, Claire, you can have a sexy cartoon. This is my favorite, though.
Look, folks, I was reading this thing, Pit News, right? Great stuff. I mean, back in Scranton, we had newspapers, but I didn't have, the thing with the facts. Claire Christensen, she gets it. Sharp gal. Reminds me of my Aunt Margie. Could parallel park a Buick with one hand. Subscribe.
Subscribe. All right, guys. That's all I got for you today. Let me know how your portfolios are doing. And if you guys have any questions or help, always happy to help. So I'm looking forward to hearing how you guys are doing. And we're going to start our classes down at the university this fall. Hopefully some of you guys can come and join, and we'll be in that class and we'll meet in person. And that's always a lot of fun too. All right, guys, we will see you tomorrow afternoon at 1 o'clock for Power Hour to do a little day trading. That's always fun too. See you then.
All right, that wraps it up for today. If you got something out of this, do me a favor. Like the video, subscribe to the channel, and share it with someone else who's trading or learning.
Hey, don't forget to tell them to subscribe to Pit News Magazine.
Oh yeah, definitely subscribe to Pit News Magazine. You'll thank us later.